Hi friends, welcome to Ask Investment Academy YouTube channel. In my last video, I have given entire information about IPO. In this video, I will explain about rights issues and I will explain how it will be beneficial for the investors. If you are yet to subscribe to my YouTube channel, please subscribe immediately and click on the notification symbol to get instant updates on free stock market awareness videos. Friends, if any company wants to raise funds for their business expansion or to clear debts, then they will choose initial public offering, shortly IPO. If the same company is already listed in the stock market, then they will choose rights issue of shares. Rights issue means it is an offer to the existing shareholders of that company to purchase additional shares at the discounted price in proportional to the already holding shares. Shareholders can either buy the rights or sell the rights or ignore the rights. Based on the privileges given to the shareholders, right issues are of two types: renounceable rights and non-renounceable rights. If the shareholders have the privilege to buy or sell or ignore the rights issue, then it is called as renounceable rights. If the shareholder doesn't have privileges to sell the rights, and if he can only buy or ignore, then it is called as non-renounceable rights. Generally, companies want their existing shareholders to buy more shares to raise the capital. Some shareholders ignore the right issues if they don't want to invest in the financially unstable companies or weak performing companies. Many shareholders show interest in the renounceable rights because they can buy the right issues at the discounted price and they can sell off immediately at the current market price, which is very high compared to the discounted issue price. Generally, shareholders who are holding the stocks before the record date decided by the company are eligible for the participation in the rights issue. Company announces the entitlement ratio also, which means how many shares a shareholder can buy in the rights issue. It depends on number of stocks he is holding before the record date. For example, if you are holding 10 shares of a company at 100 rupees per share, and if that company comes up with the rights issue of 1:10 with a discount price of 20%, then that company gives one share for every 10 shares. At that same time, stock price will be adjusted by 10% on the rights issue allotment date. So, new stock price is 90% of the price on the prior day to allotment date. Since that company is offering rights with a discount of 20% and 10% is the adjusted price on the allotment date, investors will get 10% of profit. For understanding this rights issue, I will give you one example. Deepak Fertilizers offered rights issue to the shareholders with issue opening date as September 28th, 2020 and issue closing date as October 12th, 2020. Here record date is October 7th, 2020. They are calling it as last date for market renunciation. Then check entitlement ratio. In this case, Deepak Fertilizers is allowing shareholders to buy rights for 3 shares for every 20 shares held by the shareholders as on the record date. Next important thing what you have to observe here is number of shares they are issuing and price of each share. Allotment date of Deepak Fertilizers rights issues is October 21st, 2020. On October 12th, 2020, which is the issue closing date of Deepak Fertilizers, it ended at 146 price. And they are offering rights issues at 133. That means Deepak Fertilizers is offering rights at only 10% discount as on the issue closing date. Deepak Fertilizers stock price will be adjusted to 15% on the rights allotment date. Why? Because since they are giving 3 shares for every 20 shares. So it is not beneficial for the investors who buys at 10% discount price as on issue closing date. Why? Because they are losing 5% of money in this case. Since Nifty is near to 12,000 on October 12th, and as per technical analysis, Deepak Fertilizers will be bearish in the month of October. So there is no chance for the Deepak Fertilizers to go above this level in coming days. So that's why I did not showed interest in buying these right shares, and I suggested the people who asked me not to buy these shares. If any company offers rights issues with 20% or greater than 20% discount as on the issue closing date, then you have to apply the technical indicators and technical analysis on that particular stock, and you have to predict whether the stock is going to be bullish on the allotment date or it will be bearish on that allotment date. Then you have to take a decision whether to buy that particular right issues or not. If you like this video, please like, share, comment and subscribe to my YouTube channel for more free stock market awareness videos. Thank you very much.